Hello again, traders. Doing Trader once again, your swing trading master. Here to show you another trade idea as I take advantage of this $1 trillion market. Now here you can see the trade that I'm in on the Canadian Japanese yen, where I've taken a short position with expectation that this bearish movement that started with this bear crown setup is going to take us down towards the support boundary to complete the formation of this larger consolidation setup that is being formed on the 4-hour chart. So going down to the 1-hour chart, what took place was that the market formed this consolidation setup in the form of this downtrend channel. And as you can see here, it's now breaking below the support boundary. And the expectation is that the break of this consolidation setup is going to take us down towards the support boundary of this larger pennant setup that you can see being formed here. So this consolidation channel, this resistance boundary, support boundary is expected to be hit within the next 6 to 12 hours. And once this is hit, it will complete and confirm the formation of this overall setup on the 4-hour chart. So that is what I'm seeing taking place on this currency pair right now. The formation of this downtrend consolidation channel, the support boundary and resistance boundaries formed at these areas here. And so with this breakout from the 1-hour consolidation channel, we should see hit this area here within the next 6 to 12 hours. Now you can actually set your limit order at the boundary itself, but what I like to do is to exit just above the boundary, because what happens is that from time to time, whenever the market is going towards a boundary like this, it will encounter a lot of opposing buying pressure, in this case in terms of a downtrend. And so we could actually see the market hesitate a while for a little bit and even pull back temporarily before it actually hits the boundary. So what I like to do is get out just before that pullback and pause and exit before the market actually hits the boundary. So that is my preference. In other situations, I could also decide to actually set my limit at the boundary itself. But if the rate of return is large enough, then I would comfortably exit the trade just before the boundary is hit. So that is what I'm seeing on this currency pair right now. Breakout from the consolidations channel on the 1-hour chart, taking advantage of this bearish movement that started with this bear crown setup. Left tip here, center tip, and the right tip that led to the strong U-turn to form the second support resistance point to complement the one already formed here and provide us with this resistance boundary. So bear crown setup, bearish breakout below this uptrend line, and the formation of this 1-hour consolidation channel that is going to lead to the movement down towards the support boundary. So let's see what takes place within the next 6 to 12 hours, and hopefully we can see the market hit this area here and provide us with a trading gain. So one more thing before we go. The downtrend channel on the 1-hour chart, as you can see here, the stop loss was placed above the formation of this candlestick formation, and it is also coinciding with the resistance boundary. So you can either place your stop loss above this area here or above the resistance boundary of the channel itself. And of course, as you can see in this case, if both of them are in the same place, in other words, if your stop loss is placed both above the candlestick formation as well as above the resistance boundary, it provides an even greater level of protection in terms of your stop loss against temporary pullbacks. So whenever we're trading downtrend consolidation channels, the first place or the best place that you look for in terms of a downtrend, in terms of a bearish movement, is to place your stop loss above the resistance boundary. If that is not possible, and if that stop loss will be too high, the next alternative is to place your stop loss above the formation of a candlestick formation. So you place it above the high of the U-turn that took place here, above the bearish engulfing candlestick formation at this area here. If placing a stop loss above the resistance boundary would require too large of a stop loss. So let's see once again what takes place in the next 6 to 12 hours and analyze the market after it completes its movement.